people are hoping for a Fed reaction like during COVID, right? Crisis, we have to change everything. And that's really not, I've been saying this on the show, that's not what's happening today. And you see these fractals on Twitter, right? Oh, QE starting, we'll shoot up to $400,000 Bitcoin. How is this different? How is today different from what the Fed did in 2020?
Because in the aftermath of them hiking rates at the fastest rate hike cycle in history, the interest expense, the gross interest expense on the debt started to blow out. If this cycle continues, right, the debt expense will be the biggest line item. And that's the conundrum that the Fed faces, and that makes this different from any other cycle. Is on one hand, they're trying to fight inflation that they themselves created in 2020 to fight COVID-19. And so to do so, they have to raise rates and be restrictive in their monetary policy. And on the other hand, they're saying, okay, well, we're fighting inflation. We're seeing this, increase. We're going to hike rates super hard, super fast, ratchet the gears in the economy, really tighten things up. But that blows out the debt. That blows out the interest expense, which means the debt spiral gets worse. And all that, interest expense will just keep ratcheting higher and higher and higher, and forcing the Treasury to issue more and more debt to cover the interest expense that they themselves are incurring. And that means, who's going to cover all that? Who's going to pay for all? Who's going to swallow all that?